This is the Kyle Malnati Show. Our podcast provides an opportunity to expand your knowledge, and it's our goal to make real estate investing more approachable to everyone. Each episode, we tap into the mindset of real estate experts and share their stories. Live from Denver's Cherry Creek neighborhood, you are watching the Kyle Malnati Show on YouTube. I'm your host, Kyle Malnati, and this is the show where multifamily matters. Thank you so much for watching today, and we always love to say thank you to Stuart Title for providing us a space to record our show. Our esteemed guest today is Dustin Thome of Keller-Lowry Insurance, a Buckner company. And Dustin has been my personal insurance agent as well as clients of mine, and he's done that for about 9 years with me. We've had a long-time relationship. Dustin, welcome to the show.
Thank you for having me.
Of course, absolutely. And so Dustin, let's talk a little bit about your personal background before we get into the insurance part of it. You grew up here in Colorado. You're a big athlete, and you played football specifically for both Cherry Creek High School as well as in college.
Yes, so born and raised right there in the tech center. Went to Cherry Creek High School, played football, baseball, and basketball. Ended up going to the University of Utah for football, transferring to Northern Arizona, and developed some great friendships and learned a lot from those experiences. And actually, my family and I moved back, and we live about 5 minutes from where we grew up. So.
Isn't it funny how we all kind of do that? It's there's an old saying that people generally congregate back to where they grew up, and it took our parents 30 years to get to that place in life, and within a couple of years we long to get right back to where we grew up. And so it's kind of funny how that works. So several insurance companies pulled out of Colorado over the last 2 years. Why did that happen, and kind of what do you see on the insurance landscape?
Right. It's a good question. I've been doing this 13 years, so I've seen the insurance companies specific to apartments and multifamily insurance go in and out, come in and out of the market. Most recently, we are in a hard market from the insurance perspective. And by hard, I mean premiums are going up slightly. Wind, hail deductibles are going up. The amount of insurance carriers willing to write it at a good competitive price and product are going down. That being said, there are options. The reason for it is the wind and hail claims suffered in Denver over the last 5, 6, 7 years. It's been substantial. Doing some research going back to 2008, just in the Denver metro area, insurance carriers have paid almost a little over $2 billion.
Holy cow!
In insurance claims just in Denver metro, and that's not counting south to Colorado Springs and Pueblo, or claims that just have not been turned in. So these insurance carriers, just like any business, they're in it to make some money.
That's right. Yeah, they're here to make a profit, and obviously it's helpful when you have a claim that they've got the reserves to actually pay out that claim. And so what ends up happening is, as you get these big storms, all of a sudden everybody goes and files their claim, and those coffers start to get a little light, and the profit margin isn't as big anymore. And so I think for folks that are out of state that are watching our show, a lot of people think about the snow in Colorado, but really those summer hailstorms and those late summer hailstorms into the fall, and then our spring wind that we get as it's getting warmer, really wreak a lot of havoc on these apartment buildings.
Exactly. Yeah, absolutely. And I've seen it be cyclical, and hopefully we'll have some good 2-3 years, and then we'll start seeing new insurance carriers come back in the mix and make things very competitive. So absolutely.
So our team specializes in the sale and purchase of apartment buildings, and so we intersect with your ability to do insurance, is that we're always working through a transaction into an eventual closing date. Fortunately, we haven't had many of these fire drills that have occurred where someone's racing to get coverage bound, but if someone forgets, or if someone is kind of pricing out a couple of carriers themselves, how quickly can you bind coverage? How many days does it take?
Right. Generally, we usually don't like to advertise that we can get it done that same day, but it is workable with the right information. We've had situations where individuals are on their way to the closing and they think, oh golly, we need insurance. So we, with the right information, we can put it in fairly quickly. That being said, the more time the better from the standpoint that we can be more precise and accurate with the information, shop more carriers.
And that was the point you brought up, is that the longer period of time, and it makes sense now that I know it, but the more time you have, the better the quotes you'll be able to obtain. And so that's a great reason why you want to start early. And Colorado, from a real estate transaction standpoint, the Real Estate Commission entered into a period a number of years ago where insurance actually became a deadline within our contract, so that people weren't waiting to the last minute to find out that all of a sudden the building wasn't insurable. Now, that's kind of the dramatic example, but it also gives a lot longer time frame for people to get insurance and make sure they're okay with it.
Absolutely, and usually the lenders are in touch with us well in advance as well, to where we can, that helps from the time perspective as well.
Yeah, so we've talked about insurance and why it's important. What do you think some of the main items that people, those top couple of things that people need to consider when they're talking about binding coverage with you?
Right. From the insurance perspective, the main topic would be the building coverage limit. Mm-hmm. And within the property coverage, building coverage limit covers all of your major perils: fire, wind, hail, theft, vandalism. That's a very important one. Specific to the building coverage limit, you have to look at whether it's a full replacement cost policy. Oftentimes people assume just because they're satisfying their loan requirement that they're fully insured, and there are times where that loan requirement is less than what it would cost to fully rebuild that structure.
Because from the lender's perspective, they just want to make sure that their loan is taken care of. They're, once it's paid off, they're not necessarily dealing with the total loss that's occurred, and so that's a great point.
Exactly. In addition to the building coverage, you have the loss of rent coverage. You have real specific items like building ordinance or law, which is a very important one in the sense of some of these older constructed buildings, which covers the increased cost of construction to rebuild back up to current code.
Interesting.
Boiler and machinery coverage, water sewer backup coverage, and the other main component would be general liability, your premises liability for trip and falls, slip and falls, and on top of the general liability, an umbrella policy if it suits the building owner.
And so umbrella policy, this was interesting for me as we were prepping for the show. I have a personal umbrella policy that covers liability above and beyond property, but you were talking about not just your personal umbrella, but you also need, in a lot of cases, a commercial umbrella policy.
Exactly.
And why is that?
So most of your personal umbrella policies will exclude anything commercial related. Mm-hmm. Depending on the type of ownership, if the ownership is set up in an LLC or a partnership type entity, those personal umbrellas usually do not extend over any business or commercial related entities.
So I can see a gap there, because people generally want to use LLCs to protect their liability, right? Mm-hmm. To kind of have that corporate veil, but then their perspective is, well, I've got an umbrella policy on myself to protect me from all of these issues. And so it's kind of this conundrum you're in, because you really do need to get that second level of coverage, because you are owning it in an LLC, and that's that whole point. So you need to make sure that the entity is covered above and beyond. Interesting. That's really interesting. So what do you think, that's an area that people miss on? What is another thing that people generally miss when you see someone, maybe not through the sale or purchase of a building, but someone that comes to you with a building that they already have covered by another carrier? What are some gaps in coverage that you see that you say, look, you got to make sure that you take care of this, or this is important and here's why?
Right. From the coverage standpoint, going back to the building coverage limit, mm-hmm. To make sure, one, you're fully insured to full replacement cost. It's amazing how many times I see a building policy written on an actual cash value valuation as opposed to a replacement cost. So that really leaves a big gap in coverage, basically paying only what those building materials are worth today as opposed to what it's going to cost to rebuild that structure. Another area I see are the auxiliary structures, the detached structures, your garages, your carports.
Yes.
People assume that because that location address is on the policy that that's covered. And sometimes it is, depending on the insurance carrier, but other times you have to specifically list those structures in order for there to be both property and general liability coverage.
Yeah, and in a lot of ways, these alleys that we have in Denver and these garages and carports, you've got a high tendency for trash trucks or other service vehicles to back into one of those and kind of back away, and you'd love to say that they contact the owner and say, hey, we damaged your property. But I've got several clients that have these garages that are right on the alley, and they get banged right in the corner, and to know that that's maybe not covered is a real problem.
Absolutely.
You know, and this is something that you might not say. I certainly can say that the benefit of working with a independent agent that can make a market for you, I think is another thing that people miss on. Captive agents that work and sell their own product within that company, that specific company, a lot of times the actual cash value component that we see comes from an insurance company that's all they'll do. And so I think the benefit to working with Dustin, especially if you own an apartment building, is this is not, don't get insurance because you can tie it in with your auto and your home and your life and somehow get a discount. You want to be working with someone that understands all of the different benefits that a commercial insurance carrier needs to have for you as an insured, as someone who's going to be insured, because you're going to be missing some things. So don't just blanket choose one insurance agent because they've got all your other stuff in your personal life. You really need to know this market, and there's some very specific nuances that you'll know that other agents might not. So I think that's another thing people miss. All right, so everyone has nightmare stories. I'd love to hear maybe kind of the wildest claim that you've heard of, or kind of the craziest situation as it relates to an existing insurance policy you had.
Right. We've had some doozies, and not so much specific to apartment building, which we've had a fair number of those as well, but we insure a zip line, and without saying names, there was a third-party individual that broke into the zip line, took off his belt and zip lined down with his belt, and
so he's decided to go on a little joyride and figures that that's going to work.
Right. The belt wears thin, and he fell and suffered major injuries.
Oh my goodness!
And ended up bringing suit against the zipline company.
You got to be kidding me! So this is some random guy busts in, decides he's going to go on a little joyride, and it's like a cartoon. You can see it. It breaks thin, and then he sues the company.
Exactly, and yet the defense costs and everything associated with that liability is covered under the insurance, and it just goes to show you, you think you're doing the right things and protecting your exposures, and something like that happens.
Yeah, you can't even plan for that. That's the whole point of insurance. And so one final question that we have for you, totally off topic of insurance, but just about being a dad and an entrepreneur. How do you relate to your kids as you look at business, and what are some of the things that you say are kind of benefits and also struggles of being a busy guy that's working hard for your clients but also having 3 little kids?
Right. It's hard, but I love it.
Yeah.
I love every second of it, and you go through work and you do your best there, and you come home and the kids and the family and the wife, they put it all in perspective, and this is why I do what I do, and so I can create time to any free time I have, I try to dedicate that to the kids, whether it's volunteering or coaching or just being there with them, and that's what brings me. That's why I do what I do every day.
That's right. We work hard at work, and then at the same time we play hard and we focus on our kids and be intentional with the time that you do have with them, because you spend so much time away, obviously. I love the quote that you picked. A lot of times we pre-select a quote and then have our clients say if that's okay, but you came in with your own quote from Winston Churchill, and it says, "Some people dream of success, while others wake up and work hard at it. And so there's that lofty idea of, I hope that I'll be successful, or maybe the universe will bring me something. That's a bunch of malarkey. Work hard. We're in a reaping and sowing world. You work hard, you plow the field, and then you pray for it to rain, because you can't control that. But absolutely work hard every day. And I'd say over the 9 or 10 years that you and I have worked together, I have seen that embodied in the way that you operate your business. 15 years, I congratulate you for that. That's an incredible amount of time to be in the business. And the majority of our clients work with you. And thank you so much for all the things that you do to help them. It's really a blessing to know that we've got someone that can work through all these different nuances and know the best carriers and keep it affordable, but also keep people protected. I think that's really, really important to us as a brokerage team.
Appreciate that.
You're welcome. Well, and I say that leaders are readers. You are clearly a leader, both in your household, at your office, but then also just in the community as a coach. And so I get all of our guests a gift. And the gift that I've gotten you, which I've gotten several clients, is Entree Leadership, which is an amazing book. I had a mountaintop experience a couple of months ago by being able to go and see Dave Ramsey and his team in action through what's called the Entree Leadership Master Series. This book is Dave's playbook for how he created his business. And there's so many great truths in that book, just about sales and hiring and what you do with personnel. And I think you'll enjoy that a lot.
Appreciate it very much. Yeah, this is right up my alley with the types of broker. I love it.
Good.
Thank you very much.
Well, and for Dustin, I'd love to say thank you for watching our show. This is our 22nd episode, and this is the show where multifamily matters. This is about you, the apartment owner, and the rental property owner. So as we love to say, we will see you around the neighborhood.